The Didi Index Indicator, which is a valuable tool and is available for various financial trading platforms on the comprehensive TradingFinder website itself. Telgram users can download the indicator file for MetaTrader 4 and MetaTrader 5 from this section, and they can also read this page to learn about how the indicator works and its functionality. From the Navigator section, we select the indicator file, and by dragging the file onto the chart, we run the indicator. Once the indicator is loaded onto the chart, an oscillator window appears at the bottom of the chart. The Didi Index Indicator is a special and practical tool that traders can use to analyze short-term, medium-term, and long-term momentums as an oscillator in the lower section of the chart. With this oscillator, we can identify the direction and strength of the trend. Here, I am carefully changing the color of the various oscillator lines so that they are displayed much more clearly and are easily distinguishable. Experienced traders can also strategically use the precise crossover of the prominent blue line and the equally significant green line as definitive entry signals for their potential trades. When this crucial crossover event occurs, indicating a potential shift in market momentum, we can then confidently enter either a carefully considered buy position or a well-analyzed sell position within the dynamic market. For example, here we clearly see that the price is consistently making lower highs and also lower lows, and when we carefully observe that the overall market trend is indeed taking a significant downward direction, we can then patiently wait for the blue line to cross over the green line moving upwards. When it decisively moves above level 1, we can confidently consider it as a strong confirmation of the prevailing downward trend and then subsequently enter a sell position in the market. In another distinct section, we observe that the price is steadily making higher highs and also higher lows, and in this scenario, we can patiently wait for the green line to cross over the blue line. When this crucial crossover precisely occurs above level 1, we can then confidently enter a buy position in the market. After that, we clearly see that the price trend is consistently moving upward. Experienced traders can also effectively use the distance between the blue line and the green line as a reliable indicator of price momentum, and the greater this distance becomes, the stronger the momentum in the market. They can effectively use level 1 as a solid confirmation of a trend and base their comprehensive analyses on it. When the blue line is above level 1, it indicates a downward trend, and when the green line is above level 1, it indicates an upward trend. In the Comprehensive Settings section, specifically located under the Input tab, there are several distinct options readily available. Within the first input, we can meticulously set the time frame for the indicator's calculation, which by default is intelligently based on the current time frame or the time frame we are presently on. We can precisely specify time frames ranging from 1 minute up to 1 month here. In the next parameter, we can accurately determine the price basis for the calculation, choosing from a comprehensive selection of options such as close price, open price, high price, low price, medium price, typical price, and weighted price. In the following section, we can also meticulously set the shift value, which precisely determines whether the oscillator line moves to the right or left based on the candlestick, allowing us to perform our analyses accordingly and specify the indicator's exact offset value. In the next parameter, we can specify the calculation period for the fast or short-term moving average. In the following parameter, we can set the period for the medium-term moving average. And finally, in the last input, we can freely adjust the period for the slow or long-term moving average as desired. Just keep in mind that the first input is related to the short-term moving average period, and its period should be shorter than that of the medium-term moving average, and the medium-term moving average period should be shorter than that of the slow-moving average. Well, friends, we've reached the end of this indicator tutorial. I'd be happy if you share your comments and suggestions with us in the feedback section.